Hello and welcome to Economic Lifelines Nigeria. In today's episode, we look at the federal government's Sugar Master Plan, an initiative aimed at reviving the Nigerian sugar industry as part of a broader industrialization program. The 1980s and 90s were a difficult era for manufacturing in Nigeria. The sharp depreciation of the naira was one of the many problems facing manufacturers of food and other industrial items. Years of neglect and underdevelopment in electric power generation and other infrastructure led to the collapse of many industries. Given these challenges, the period was marked by a steady shift from the local production of food in Nigeria to the massive importation of many food items, costing the country approximately $6.6 billion annually. Sugar is one such item. Sugar refining in Nigeria dates back to the early 1960s, with the setup of a government refinery in Basita. Over the next 3 decades, poor management of government-owned factories and other economic factors led to the collapse of many of the sugar companies.
The history of sugar industry in Nigeria began with Bachita in the 1960s, when Bachita Sugar Company was actually established. And that was our first sugar company. Then later on, Savannah Sugar Company was established in the late 1970s, actually commissioned in 1980. Coincidentally, we're sitting right here in Savannah where we're taking this picture. Now, the history cannot be without the consumption itself. Nigeria is a country that is consuming about 1.4 to 1.6 million metric tons of sugar annually. And based on that, Nigeria is also working on trying to establish sugar company just similar to what we have in Savannah, because it takes me down to the history of the refining that you have mentioned earlier on. Today we have 3 sugar refineries in Nigeria. The Dangote Sugar Refinery, which is in Apapa, Lagos. The Bua Sugar Refinery. Dangote Sugar Refinery was established in the year 2000, and today is a company with 1.4 million metric tons per annum refining capacity. Then followed by Bua, which was established in the year 2008-2009. It has about 750,000 metric tons per annum. And then this year was established the flour mill, which is the Golden Sugar Factory, also in Apapa. That also has about 750,000 metric tons. So the two of them constitute 50% each of the Dangote Sugar Refinery, and so Dangote Sugar Refinery is twice what each one of them is. So currently, refining capacity in Nigeria is almost approaching 3 million metric tons. However, all this raw sugar is imported from Brazil, from Santos. So the companies like where I'm standing right now are actually not giving Nigeria what it needs. But Nigeria has developed a sugar master plan, which was in the year 2012. So during the master plan, Nigeria has decided in the next couple of years, in fact 10 years has been selected, Nigeria is going to be producing, roughly 2 million metric tons of sugar locally.
The sugar industry was reinvigorated by the privatization of sugar resources and policy reforms designed to increase local production of the commodity. It also received international support from organizations such as the United Nations Common Fund for Commodities, who committed $1.6 billion to sugarcane research in Cote d'Ivoire and Nigeria.
The 3 major refineries in Nigeria have, for the first time in the history of this country, signed on with the Ministry of Industry, Trade and Investment their backward integration program commitments, under which under the first phase, we expect them to produce about 700,000 tons of sugar annually.
Based on the agricultural sector itself, I would say that banks are now more active. For example, about 3-4 years ago, banks' exposure in terms of loan creation to the agricultural space used to be less than 1%. Now we have that to about 4%, which I think is a very good milestone that we've achieved over the last 3-4 years. For instance, banks like GT Bank, Zenith Bank, and UBA, of course, which before now are always relatively averse to the agricultural space because of the fact that there are a lot of peculiarities, and of course the risk is beyond what the banks are willing to take. They now have exposure to the tune of about 5% of the loan book. So I think that's something interesting, which of course we also expect that will continue to grow into the future as the CBN, the Federal Ministry of Finance, the Ministry of Agri, and of course all the other stakeholders begin to de-risk that segments of the economy, particularly the processing value chain.
The Nigerian Sugar Development Council was formed in 1993 in an effort to raise domestic production, which at the time was at 50,000 tons, a fraction of the country's total demand of 700,000 tons. In an attempt to increase the sector's potential, the NSDC's first step was to push for the privatization of Nigeria's sugar companies. Government-owned sugar companies were bought by private sector players, including the Dangote and Bua groups.
The council is the focal agency of the federal government in charge of the sugar subsector. We actually developed the master plan, and we provide the secretariat for all the various committees that implement the sugar, because you know the sugar sector traverses so many other sectors, you know, the bakeries, especially the consuming sectors, the bakeries, the confectionery, soft drinks, breweries, pharmaceuticals, name it. So we do have the major committee that actually supervises the implementation of the sugar master plan. Is what we call SOMIC, Sugar Roadmap Implementation Committee, and it's comprising MDAs and the Manufacturers Association of Nigeria. But we do have another group we call CMOG, the Sugar Industry Monitoring Group. This is comprising the industry players themselves, the Dangotes, Bua, you know, flour mills, who are self-monitoring their own project, because it's a national, you know, project. All of them agree on the need for Nigeria to produce the sugar it consumes, because we believe we have the competitive and the comparative advantage to do so.
The federal government of Nigeria established what we know now as Sugar Industry Monitoring Group. The Sugar Industry Monitoring Group is actually responsible, you know, for ensuring that the government keeps on track as far as this strategy is concerned. And so all the managing directors of the 3 sugar refineries are members of this group. As a matter of fact, I'm the chairman of the monitoring group right now, as it's been established. And it has members from the Sugar Council. It has members also from Federal Ministry of Industry, Trade and Investment. You know, so we are also going to engage some members from the Federal Ministry of Finance. What this is going to do by the time this integration is fully done, last year alone, Nigeria spent $620 million in the importation of raw sugar alone. You know, so by the time we now have fully integrated companies such as this, and federal government is able actually to do exactly what we mentioned earlier, and Dangote Sugar is also able to do what we said earlier. Instead of now importing, we are now going to be gaining forex instead of foreign exchange going out, we are now going to be getting foreign exchange coming in.
In the process of privatizing the sector, the NSDC drafted the National Sugar Policy in 2003. The policy included incentives such as low import duties on machinery for the industry. A 20% duty and other levies were imposed on imports of refined sugar, but lower duties were charged on raw sugar imports. These policies resulted in a major shift in the industry structure. Today, more than 80% of sugar imports into Nigeria are in the form of raw brown sugar. Another incentive that drew investments into the sugar refinery industry was the introduction of a 5-year tax holiday.
The Sugar Master Plan is the roadmap that the federal government of Nigeria approved last year, September, for Nigeria to achieve self-sufficiency in sugar production. It has 4 major objectives. 1, to raise the level of sugar production to ensure that Nigeria achieves self-sufficiency. 2, to stem the tide of high importation of sugar. We currently import over 1.3 million metric tons of sugar annually. We want to reduce that one substantially. The third objective is to create huge number of job opportunities for Nigerians. And the fourth one is to also contribute to the production of ethanol and generation of electricity. This is what sugar sector does all over the world.
The Nigerian Sugar Master Plan is trying to encourage the backward integration for the sugar refiners. What that means is that the government is trying to encourage the refiners to develop the sugar plantation And I think it's also good for the refiners. I think it's good for the industry. The reason being, even though it takes some time and it costs a lot of money, the capital is really huge, but the profitability is, really great. And Nigeria as a country that has a population of over 170 million people, you can imagine, the potential. And not only that, I think Nigeria can serve as a hub, to supply sugar to the entire West African region. So really, I think it's very, very important, because not only for the sugar itself, but also the other products, the byproducts, such as, the bagasse, you can use it to generate electricity. You can do animal feed with the bagasse, and I think it will go a long way to help the economy, as well as huge job creation for the country.
Now, Nigeria is the 4th largest sugar importer in the world, and last September the federal government approved the Nigerian Sugar Master Plan, which is a comprehensive policy designed to transform the nation's sugar industry into a major economic earner driven by the private sector. The implementation of the Sugar Master policy will require $3.1 billion from the private sector over a 10-year period. This will be used to fund 28 sugar projects across 17 states. If successful, the projections for the master plan are to produce 1.79 billion metric tons of sugar annually, more than enough to meet local demand.
By the time we implement the master plan in its entirety, between now over the next 10 years, we are expecting to generate a total of 117,000 jobs, opportunities. Don't forget, we are talking here of farmers, of agronomists, of chemists, of people that work in the laboratory, down to the administrators, to the marketers, to the engineers, a whole gamut of professionals and, people that work at the different stages of the sugarcane value chain. And it's an extensive value chain. In sugarcane, from sugarcane, we not only produce sugar, we produce ethanol, generate electricity, produce livestock feeds, and then when you talk of the uses to which sugar is even put, then you even expand they've estimated, for instance, in India, the sugar industry itself generates direct employment for over 1 million people. But when you factor in the dependents, you are talking about 5-7 million people that benefit directly or indirectly from the sugar industry. And that's the kind of thing we want to replicate in Nigeria.
The Sugar Master Plan is a backward integration policy, similar to what was implemented successfully in the cement production sector. The policy pushes for the vertical integration of the industry. Users of raw materials are to acquire suppliers or set up their own facilities to ensure a more reliable, cost-effective supply of raw materials. Nigeria's Trade and Investment Minister, Olusegun Aganga, said the policy will address the strategic importance of the industry to generate jobs and save much-needed foreign exchange for the country. The policy aims to save up to $500 million each year and generate over 117,000 jobs. In addition, a spin-off for the economy is the generation of over 400 megawatts of electricity and the production of about 161 million liters of ethanol each year. But for all of this to work, private sector investment is needed.
The impact is massive. One, and more important, to us in Nigeria, is creation of employment. Right now in Savannah, with the little Savannah is producing, the employment opportunity during crop is close to 3,000 people. By the time we have 20,000 hectares of land under cane in Savannah, we will be talking about 15 to 20,000 people here in Savannah. This will be duplicated in all these locations, so you are talking of not less than 100,000 people being employed. As you know, sugar produced from the cane gives you the opportunity also from the bagasse to produce electricity, something we're having a lot of challenges with here in Nigeria. So if we produce, we can utilize what we need, and then part of what we don't need, we can actually send to the national grid, and sell to the federal government for sale to other local communities. In addition to that is an opportunity. Nigeria has an opportunity, has a legislation in place to ensure that 5% of our gasoline is actually blended with ethanol. If we now produce from here, part of the molasses will be used to produce ethanol. And this ethanol is going to be also used and save Nigeria 5% of whatever we are going through. You have seen what is happening in the National Assembly continuously about the PPPRA subsidies. So if we import less and then blend with ethanol, it also reduces that tension. This area that we have in the northwestern part of the country is an area that have lots of nomads, a lot of cattle. So animal feed is one of other advantages that you can also benefit from this. So the advantages are actually enormous.
For instance, in the Sugar Master Plan, the government has a target by 2020, Nigeria should be able to produce about 161.2 million liters of ethanol from sugarcane. Of course, that's an ambitious target, which in our own view, yes, it's good to set target, but of course, I think it's the right step in the right direction. Now that the government is looking at that, it's been done in Brazil, for instance, and it's not impossible to actually achieve that feat if all stakeholders actually work towards it. But the important thing is the fact that it's not so much of the output, it's the bankability of the project itself. At what cost do I produce the ethanol? Is the cost competitive to what is produced at the international market? What kind of tariff regime do we have in place to actually favor local production of ethanol in Nigeria from sugarcane? Don't also forget that sugarcane is not the only source of ethanol that we can actually have in Nigeria. There's cassava. You can actually make ethanol also from cassava. So sugarcane is not the only source where you can actually do that. But of course, I think this is also interesting because it's coming on the back of the power sector reform. For instance, if you can produce as much as 161.2 million liters of ethanol, that should take you to about 400, between 350 and 450 megawatts feedstock into a power plant. And of course, if you're looking at generating power to the extent of about 350, 400 to 450 megawatts of power, I think that's something interesting that the government definitely should be looking at.
First, you see Nigeria already spends over almost $1 billion this year alone importing sugar. So, even from the forest point of view, it goes a very long way, as well as the job creation that we just mentioned. And also, Nigeria is just, where the country has just sort of privatized the power sector in a way. And with sugar plantation, you'll be able to generate electricity. A company in Sudan, for example, Kenana, which has the largest sugar plantation in one place, which is about 50,000 hectares, are already doing about 100 megawatts of electricity. So just imagine, by the time the one other sugar processors have their own plantation, definitely you can see the amount of electricity that can be generated, as well as other byproducts that can be used for animal feeds and so forth. So really, I think it will go a long way in helping the economy of the country.
Since the implementation of the master plan, Nigeria has attracted $3 billion of investment into the sugar sector. However, domestic production remains insufficient to meet local demand.
Today in Nigeria, we do refine sugar. The focus is more on the primary segment of that subsector. And what I mean by that is planting sugarcane itself. Of course, today in Nigeria, just about 3% of the sugar that is being refined in the country is actually produced locally. So we're talking of improving or increasing the production of sugarcane and sugarcane beets itself. Which of course is why I think the Sugar Master Plan focuses on not so much of the refining, because of course today in Nigeria we even have excess refining capacity of about 3 million metric tons capacity. That's largely driven by Dangote Sugar itself, that has about 1.4 million metric tons capacity. We have the Boa Sugar Refinery, about 500,000 metric tons capacity, and of course the recently commissioned Golden Sugar Plant, which is owned by flour mills. That's about 750,000 metric tons capacity. So it's more of the sugarcane and the sugarcane beet itself as against the refining of sugar.
I think there's huge potential for investment in the sector, because first it's capital intensive, and also the potentials are great. I mean, the sugar plantation and sugar processing is a hugely profitable venture. And we as a company, we have invested a lot in the industry, because we have the second largest sugar refinery in West Africa, which is situated here in Lagos. We are putting up another sugar refinery that's going to be commissioned, God willing, next year in Port Harcourt. And we are also investing, we have bought the Lafayette, which is in Kwara State, and we have secured this land in Kogi State. And what we are trying to do is to really have a spread I don't think any of the sugar refiners or processors have such a spread, because what it is in Nigeria is that it's very expensive to transport products, locally because of the state of our infrastructure, and that spread would allow us to really be able to serve, the independent different markets without having to incur huge costs in transportation.
The West African region, and Nigeria in particular, possesses some of the most attractive opportunities for investment in sugar. Primarily, we have a very large market, a large consumption base, which I think will enable the production of the region to be sold into local domestic markets to satisfy local demand. So first and foremost, having a large market that is supported by a growing purchasing power is very important from an investment thesis point of view. I think secondly, and now specifically with reference to Nigeria, a regulatory framework to make that happen is essential. And I think credit must go to the federal government here in Nigeria for the enabling environment that has been put together through the legislation and regulation that has been put in place to back up the National Sugar Master Plan. So I think if you put those two together, you have the basic criteria for investment in sugar. Extend that to good natural resources. As you see here at Savannah, we have wonderful natural conditions in terms of soil, water, climate, and an able and willing workforce to enable the investments that are required.
We also have a number of other new investors, people that are investing in the greenfield projects. We have a group like Confluence Sugar in Ibaji in Kogi State. We have a new group called Honey Gold that is looking at establishing sugar factories in Guyuk and Mayune in Adamawa State. We have the Flour Mills of Nigeria that is having its own backward integration project at Sunti and is planning to expand. We have the BUA. I mean, we have, within the 1 year, we have a number of, we have recorded a number of new investments that the sector has not been able to attract in the past 30 to 40 years.
The implementation of the Sugar Master Plan is not without challenges. Analysts and investors express concern about a shortage of sugarcane to supply refineries. There are also concerns about the underdevelopment of local sugar production technology and an unsustainable private investment environment.
One of the biggest issues with sugar investment is the large capital investment required and the extent of skill and human resourcing required to run efficient sugar operations. Our brief here in this part of West Africa, Nigeria in particular, is to build a world-class sugar business, one that in 5 to 10 years will stand on the map of the world of sugar as one of the leading examples of what can be done. So one of the biggest challenges that face us in developing this industry, I think, is to build the capacity to support that world-class operating environment, skills upliftment, the recruitment of resources that will be applied to the running of these operations is a fundamental challenge. And I think a lot of attention will be placed by our group in training people. Nigeria is blessed with some wonderful skills, wonderful professionals who I think will adapt very quickly to the sugar industry. But that probably is one of the biggest challenges, in actually getting the right people, training them to take on this world-class business in 5 to 10 years' time.
The greatest challenge will be for the government to be able to maintain the policy, because what you don't want is a situation whereby you invest hundreds of millions of dollars or even billions, and the government now reverse the policy to allow importation, especially for those that are really not in the industry. So for us, that could be that could be a challenge. And also, I think in the Sugar Master Plan, the government has mentioned that they are going to put the infrastructure for some of these plantations. The reality is, this infrastructure is not there. So, there are some things that government should do that were supposed to do that in other parts of the world. The government responsibilities to do in Nigeria, you have to do them yourself. So that really puts up your capital expenditure very, very high.
I think one of the challenges that we may have is the land reform system itself. And I'll typically tell you today that in Nigeria, based on our own research, about 500,000 hectares of land are actually good for sugarcane cultivation. So it's not a problem of having the land, but having access to the land. Yes, we've got about 500,000 hectares of land which can actually be used in farming sugarcane. And of course, the Sugar Master Plan is even looking at just about 280,000 of hectares of land to hit the targets of actually having about 1.79 million metric tons capacity for raw sugar cultivation in Nigeria. But the problem is not so much of whether we have the land, but can people actually access the land?
Nigeria's Sugar Master Plan is still in its infancy. Despite notable challenges, the government and industry players are optimistic that key targets will be met. These include 117,000 direct jobs, boosting electric power supply, and conserving forex reserves. That's where we leave it for today. See you next month for another episode of Economic Lifelines Nigeria. This program and other past editions of the show are available on our website at www.cnbcafrica.com. So from me, Keisha Gitari, until next time, goodbye.